Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during March 2013. I'm Suchit Gupta, a member of S&P Capital IQ's Leverage Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in April and early May 2013. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the over 10,000 contacts in LCD's Leveraged Loan group on LinkedIn, as well as leveragedloan.com and highyieldbond.com, free websites promoting the loan and high-yield bond asset classes. On it, you'll find recent market stats, news and analysis, high-yield and leveraged finance job postings, and online primers that explain key market terms. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. Loan issuance was 4.85 billion in March 2013, while high-yield bond issuance was 8.6 billion euros. According to JP Morgan High Yield Research, estimated inflows into European high-yield funds was 614 million for March versus an outflow of 154 million in February and an inflow of 1.8 billion in January 2013. Secondary markets were mixed. Loan markets were up almost 40 bips to finish the month at 99.86, while high-yield bond markets were down 26 bips to finish the month at 102.57. The S&P European Leveraged Loan Index, the LE, finished the month up 0.91%. Default rates were mixed, as default rates by principal amount fell and default rates by issuer count stayed level. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices rose almost 40 bips to finish the month at 99.86. For the first quarter 2013, loan prices are up 252 bips versus 197 bips for the first quarter in 2012. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market finished the month down 26 bips to close at 102.57. For the first quarter 2013, the high-yield bond market is down 39 bips versus being positive for 975 bips for the first quarter in 2012. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.91% for the month of March, up from the 0.4% seen in February, but down from the 1.18% seen in January 2013. This brings the year-to-date, or the first quarter 2013, return to 2.52% versus 4.36% for the first quarter in 2012. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. Renewed Eurozone uncertainty on the back of the Cyprus situation may have given the markets pause for this month, but it was brief and didn't stop the high-yield market from having one of its busiest months to date. The more than 2.9 billion euros issued in the third week of the month pushed high-yield volumes to 8.6 billion euros in March, the highest monthly total on record. Refinancings remained the backbone of high-yield issuance, and highlights included issuers such as DFS and Rexel refinancing their bonds via the make-whole call, while Taco, a German retailer, demonstrated the market is open for trickier bank-to-bond deals, noticeably at higher yields. But if bond investors were lapping up the flow, loan players were left to salivate as the 2 billion tranche of Heinz loans was whisked from under their noses in favor of cheaper dollar financing, leaving them with a mix of add-ons, recaps, and refinancings with which to try and soak up repayments. Monthly loan volume was 4.85 billion euros. Loan volume for the first quarter 2013 was 15.5 billion euros versus 7 billion euros in the first quarter 2012. High-yield bond volume for the first quarter 2013 stood at 21.4 billion euros versus 12 billion euros for the first quarter 2012. The default rate by principal amount fell to 5.9% at the end of March from 6.2% at the end of February 2013. The default rate by issuer count stayed level at 7.2% at the end of March 2013. Themes to watch for going forward. Further spread/yield compression is expected as loan issuers use access to the high-yield markets to reduce existing spreads on their existing loans. Along with repricings, some sponsors are tabling dividend recap deals to take advantage of investor demand, both in loans and high yield. There's still strong demand for high yield bonds. So far this year, net inflows into high yield European high yield funds stands at 2.26 billion euros, according to JP Morgan High Yield Research. Bond for loan takeouts will continue to keep pace as issuers address their maturity concerns. Both Apollo Investment Managers and Primerica are expected to price their CLOs sometime in April, and there are whispers that others might be looking to do the same. There's fear that geopolitical shocks could erode confidence from the markets, a la Cyprus. That brings us to the end of our overview. I hope you find it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the info box. Thanks very much. We'll see you soon.